In this video, we're going to look at how we can actually recognize when the temporal disposition is happening in the market. So when does that market structure actually shift from a downtrend to an uptrend, or from an uptrend to a downtrend? We'll also look at some confirmation when the actual structure is now established, and areas will start to identify areas where we can actually get in and trade this market structure. So as I was saying in the previous video, when we have a downtrend, we have a high here, of a lower low, then we have a lower high, and then after that we have another lower low, right? So what we're looking for here now is the market to essentially close past here, right? Not reject this high. If the market comes up to here, that's a continuation pattern because it hasn't took out this crucial high here. What we're looking for is this market to actually close past the most recent swing point it had. And by swing point, you do really need to look for, we'll go through some examples in a minute, you want these clean swings in the market. So when price action moves violently to an area and then swings away, so violently to an area and then swings away, you don't want a lot of chop price action, just one candle sticking out and just continue with the chop price action. You really want those orders to accumulate like above or below these swing points, because the bigger the swing point, the more orders actually going to be in the market there. So you are looking to benefit off those peoples that in this example will actually be going short, because we're going to recognize where the market shifts. So as we get close past this high here, what we're looking for now is a retracement of price action, and this retracement can be to intraday levels, it could be to supply and demand zones. There's really a lot of options where prices like to come back to. And when it comes back to here, as it comes back into a point within here, so as I said before, we can have a strong level in the market, have a level like here in the market with it being clear support level or a clear resistance level from this side. But a clear level in the market there is crucial to actually determine where you're going to get in on this move. And as price action comes here and forms this new low in the market, this is where you're looking to get in and actually go long from this position there. So if I was to break this down again, we have a high in the market, we have a lower low of a higher low, we have another lower low, and then after this lower low is formed, we're looking for that break of market structure here. So we're looking for this candle to actually close above this high there to actually shift the momentum of the market into looking for longs, and like instead of shorts. If the market comes in here, as I said before, comes in here and closes below this swing point here, that's not a confirmation of change of market structure. It's a clear rejection of this swing point here, and we won't be looking to go long in this market. Some people will still trade this, and they might have success in trading this pattern. We found that we need this break of market structure to actually be a solid candle close on whatever time frame you're actually trading this market structure. So it might be the D1, the 4 hour, the 1 hour, the 15 minute. You really need that closing market structure above this high here to actually signify that the market structure is now shifting and we are looking for longs. Similarly, if we were to look for shorts, the pattern would look the same. So we have a low in the market there, we have a high, market comes in, we have a higher low, sorry, and then market comes in past this higher high here, forms a new higher high, and then after that, so the market actually comes in, closes past this high low that's been formed in the market. As I said before, when the key close, then the market is going to come back into an area of previous support, previous resistance, a key level within the market. Maybe the weekly open, maybe an intraday high from one day. There's really a lot of discretion when it comes to where price actions like to come to. This is something we'll go through the next couple of videos. So market's going to come back into this area again, and then from this point here, what's it likely to do? As we talked about before, we are now looking for these short positions to be facilitated to the downside. So exactly the same pattern, just switched over. What I want you guys to take away from this most importantly, is that close of market structure below or above the most recent swing point in the market. Same situation happened here. Same thing we want to see here. We really want the market to swing into this point and then swing away really viciously. The harder the swing and the more violent the swing, the better the market structure is going to be. So if you just look at some live examples here, I'm going to go through these slowly so you actually understand what we're looking for. So we've got a low in the market there. If you just follow me, we've got a low, we got a higher high being made, then we've got a lower high, higher low, sorry, then we've got another higher high. So where is the most recent swing point in this market? If we just follow simple price action here, so ignore these smaller moves here, what we're looking for is this swing point there. It's as clear as day. Look how viciously price action came into here and then swung away violently from this area. And we've had the candle close past the most recent high in the market there, which is right here. Just zoom in again so you can see. Past this high here, clear market close. So what we're looking for now, we are looking for price action to close below this area here. When does it do that? If I just mark it out for you. So you can see it closes with this candle here, forms that new low in the market. So as it's formed that new low, market come down, form that new low. We are now looking for that retracement. So look for the retracement. Where does it reach? Where does the retracement happen to? Happens exactly in line with this low here. So that's a key, that's a low of the day from 24th of February. Market comes into here, and as it comes into here, you can see the seller has now been facilitated and the move just absolutely plummets to the downside from this point onwards. It's a huge move in the market. As price action comes back to that key area, like at this point, it was actually the low from the 24th of Feb. So once again, we have a low in the market. Market moves up higher, forms a higher high in the market, then it forms a lower high, moves up again, closes past this key high that we have formed before. So you can see market closed here, but then it didn't. If it closed here and then traded past this low without making this high, that would still be a valid pattern. But market kind of traded in this little range, formed this low here, and then had that big move to the downside, taking out all this price action here essentially. So as it's took out all these sellers in the market now, we are looking to get in on this sell if we see a close past this market structure here, which is exactly what happened. The market moves lower, closes past on the 2nd of March in the middle of the Asian session, closes past as a retracement up here, and now we're looking forward to getting shorts, whether it's from this low, maybe there were some key intraday levels on the 1H, maybe on the 15-minute as well. And as the market comes into here, we're then facilitating the move to the downside. That is the basis of the temporal disposition. So if we look at an example to the upside, let's say, so if we look at an example to the upside, this market structure and the swing points aren't as clear, but this is where it'll take a lot of practice to actually get used to this and identifying these swing points in the market on different time frames. So we've got a high made here in the market and quick swing just down here. I know it's only 3 candles, but it's still a valid swing in my opinion. Market has a high, lower low, market comes in again, doesn't close past these. So now we've got a lower high in the market. From here, market moves downwards, makes another lower low, moves upwards, makes a lower high, moves downwards, makes a lower low, moves upwards, doesn't close. Notice doesn't close past this area here. So if it did close, that would be our first sign of actually the trend reversing, where from the downside we are looking to get in on, we are getting in on the position to the upside. But as it's crucial, as I said, the market doesn't close past this high here, actually rejects the high. We then see the market come down further into this area, forming another lower low. So this was our last swing point in the market if we were to see the market structure being broken here. But now this is our last swing point in the market. So I'll just zoom in, make it more clear. So this is now the swing point, the last swing point in the market we're looking for to be broken in order to facilitate that move to the upside. So when is that market structure broken? If I just mark it out. Straight enough. So as you can see, market comes near, rejects this. So we can't look for longs yet. Comes in here, rejects it, and then closes past. So as we get this big candle close past, that's where we're looking for these longs. That's where we are looking to get into the market and look for these long positions. And the market does actually trade to the upside, comes down. This candle could have gone on this candle, even this candle. So it's 3 areas there. Got a big area here where the market actually came back to, or even lower within, as I said, intraday levels, intraday different price points where the market could have came back into. And as it came back into there, we then see that move to the upside facilitated. So let's have a look how we would actually recognize the market structure reversing in a live scenario, essentially. So as you can all agree, the market's in a clear uptrend here. So what we are looking for now is the market not to close below this low, but to close above this high. As it closes above this high from this swing into here, that's going to be the first sign. Well, it's going to be a continuation of the uptrend, but as it closes above this high, that's when we're going to be looking for these crucial low to be broken. So just play a price action through, see what it does. Carry on, moves lower, lower. So see, it comes into this area, but we haven't seen that crucial break of structure, that initiation of the market actually closing above this high here. So carry on. I believe we have closed now. Yeah, so we actually seen market close. So we've got a new high in the market here. Yeah. So we've got this new high. Where's the last swing point we're going to be looking for to be broken to facilitate that move to the downside? This clear swing right here. Market swings in and then violently swings out. It's as clear as anything. This is the point where we're going to be looking for market structure to come down, close below, and then essentially come back and then shoot to the downside. That's the pattern we're looking for. So just go back. Now we're going to look for the market to come down here and close below this low. Agreed. I'm going to draw a line so it's clear, straight. There we go. So apply some more price action through. Market, see, the market hasn't closed past this high here. It wants to move lower. It's curious. It wants to take these lows here. Continue, see what happens. Comes in, and there we go. We've got that crucial close of market structural kind of violet candle. This candle wanted this liquidity below this low. So now we've got a crucial low that's been broken past the previous low in the market. So what are we looking for now? From this low, point price action to come in, maybe come into these 2 lows from here, from these days, or there might be a clearer level in the market there somewhere where price actions like to come back to. And as it comes back to here, we can then look for these shorts to the downside. So let's play and actually see what happens. Apply this price action through. So you've got a nice rejection of this area here now. Continues, comes there, continues to move up. See, now this is where I'll be looking for shorts personally in this area right there. Market comes in, rejects that area beautifully. So we've actually seen a rejection of this lower high here with all these candles there. None of these candles close past this high in the market there, which is a brilliant sign for me to actually look for these shorts on lower time frames. So the market done that. What happens after? We see that move. We see that move facilitated, and market just plummets onwards. Yeah, just from, as I said, from here. From here, market just continues to plummet downwards, taking out liquidity from these lows here. And as it plummets downwards, actually, you can see we've had this low being broken right here. market structure has closed past the most recent swing. So this is actually a first sign of the market that the market's going to turn on us. As the candle closes past this high, market comes in, this candle here, and then shoots to the upside. So that once again, you can recognize the market is now going to turn on you, and it might be a perfect sign for you to actually get out if you did catch that move. So but yeah, that's pretty much it, guys. I hope like this makes sense, and I hope you can go out there and like look at these patterns and understand these patterns yourself.